Welcome one, welcome all to DeFi Crypto and Airdrops. I am Mike, aka Veteran Crypto, and David. Right at the starting gun of the race, he comes into the show. Appreciate you, brother. So,
I'm here, Mike.
man, I was like, all right, we're just gonna roll, and we'll just let him jump in whenever he gets here. But want to thank everybody in the chat. Want to thank my guests, David and Jake. Those of you that don't know, last week was our first show together. Went great. I'm really enjoying the collaboration. As far as as always, you guys have a very high level understanding of DeFi, and David with the DeFi University that he's about to go live with. Probably you were saying what this maybe this weekend or
So DeFi University is live, but what I'm going to be doing is I wanted to make sure that the core group of guys and gals had a chance to get into DeFi U for free, and
yeah.
so we've completed that, and we're on our sixth week. And so this weekend I'm going to be flipping the community to paid. So
Okay.
anyone who wants to join, it's going to be I think $97 a month, and
Okay.
then some amount for an annual membership. But yeah, doing that this weekend.
Awesome, awesome. Jake, how's it going, man? We're actually going to be getting that Metrics Finance link up on our channel and all of our socials and stuff like that because I know that I've been using the hell out of it. Especially with the way the markets have been, I've really been wanting to make sure that I'm staying profitable in my positions. You have any new news on Metrics Finance for us?
Yeah, I mean, a lot of cool stuff in the works as always. We just had a nice little roundtable across the entire team today,
Nice.
kind of get set on the vision and everything. So, think like expansion outside of the protocols that we support. Think like expansion outside of concentrated liquidity to kind of other avenues and everything. And yeah, I mean that's what I'll say for now. But yeah.
Nice. Well, we have quite a bit of content, so I'm just going to kind of jump into it because yeah, a lot of news going on today, a lot of bullish news. So, first off, just to get it out of the way, those of you that are watching on X or anywhere else on Rumble, if you want to join the conversation in the chat, please find us over on YouTube, just DeFi, crypto, and airdrops. If you would like to find Jake, Jake Call is at Jake A Call on YouTube. He has some great, and he does a really good job at keeping it around 10-15 minutes. So just nice, easily digestible lessons when it comes to DeFi, but very comprehensive and very informative. So we get a little long winded here with like an hour and a half sometimes. We try to do, more deep dive stuff, but I personally really enjoy Jake's content. I've been watching him for quite some time, and actually, before I even started this channel, I used to watch him on a regular basis. And then, of course, the DeFi University. This is what we were talking about David's offering. If you get in now, it is free. Once that switch is flipped, $97 a month is what he's saying. So I would highly suggest that you get over there as soon as possible. Get in before the getting's good. And I actually just started going through the course myself. So looking forward to kind of being able to report back of my feelings on it and just kind of what I'm learning from it. So really excited about that. So before we start kicking off too much, let's hit our usual spots, all the usual suspects. So as always, I'd like to check rwa.xyz. Here on the channel, we like to focus on, and I know Jake and David are the same way, we try to keep emotions out of our investing and out of our DeFi. So to do that, you need to ensure that you're using fundamentals, you're using analytics, you're using data to drive your decision making, to drive your thesis. So RWA.xyz is a great place to look at real world asset tokenization and adoption. As you can see, it's just pretty much up and to the right. We won't go dive too deep into this. I just want to make sure everyone is aware this is a great tool to use. DeFi Llama, same thing. Just all data and analytics, anything that you want to know about these DeFi protocols, Pendle, Aave, Morpho, Aerodrome, just any of them. You're going to find the data here. What's the TVL? What's the DEX volume? overall and on individuals. There is the correlations matrix, that Jake, always talks about, and I know David does as well, to see how well assets are correlated or move together. There's a matrices on here as well. So I'm just going to go ahead and frame the conversation, and then I'm going to kick it over to you, gentlemen, because I really want to see what your thoughts are on this. So last episode we talked a little bit about Aerodrome, and I know that, and I greatly, even though I'm bullish on it, I greatly appreciated the kind of other side of the conversation, that I know that each of you weren't super bullish on Aerodrome, but I enjoyed the conversation because it made me take a closer look at, a a project I'm bullish on. But today some news broke. So Centrifuge launched a tokenized real world assets on EVM platforms. So today they launched their integration with Aerodrome, which is making RWAs accessible on DeFi. Those of you that don't know, Aerodrome is a DEX that is built on Base Network that is being used by Coinbase and the new Base app to basically eliminate a lot of the barriers to entry into DeFi for the masses. So, without getting too deep into it, have either of you gentlemen taken a look at this news today?
I have not. No.
I have not.
All
I guess I'm out
right.
of loop. Get us up to
Well,
speed, Mike.
what's that?
I said, get us up to speed.
Oh, okay. All right. So, basically, in a nutshell, Centrifuge launched decentralized RWAs on Aerodrome, one of the largest EVM-based DEXs. Those that don't know, it's between 50% and 60% of Base Network's traffic, or volume. Users can trade these decentralized RWAs and use them as collateral across EVM ecosystems. Correct me if I'm wrong, gentlemen, but what that should mean is that you can invest in these RWAs and then use them as collateral to take out loans and other DeFi plays. Am I correct in that assumption?
Yeah, I mean,
That's good. Yeah.
I was going to say, if I were to take an assumption, it's probably just like a ERC20 token that kind of represents a share of an RWA. You go lend it out, borrow against it if specific markets support it, which would be interesting. And open trade, provide liquidity over on Aerodrome.
All right, perfect. The protocol plans to expand this standard to the Ethereum mainnet and Solana. So that would be a lot more liquidity, obviously. Real world assets and decentralized finance are increasingly converging. On Wednesday, August 20th, Centrifuge officially launched decentralized RWA tokens on Aerodrome, one of the largest DEXs on the Base network. The move makes RWAs tradable and usable as collateral on DeFi platforms across EVM chains. And this is a quote: "This is the inflection of connecting Centrifuge and decentralized RWA tokens to become available everywhere," the CEO of Centrifuge said. "We are already connected to platforms that collectively reach over 200 million users, and we are building toward a future where real-world assets are visible and natural part of every DeFi experience." Let me see if I can scan through this a little bit. I don't just want to read the whole thing. They're a type of tokenized asset that can be fully integrated into DeFi, and the first asset that will be available on the DRWA format, a tokenized version of the Janus Henderson Anemoy AAA CLO fund. Do either of you know what that is?
No, I don't. But I'm taking a look here over using Claude. So what I did is I took the title of that
Yeah,
article that you're reading right now, Mike, and I
yeah,
gave it to Claude and I told it, hey, tell me more about this. And so,
perfect. Yeah,
it turns out that Centrifuge has a TVL, greater than $1 billion, which it reached this last August,
okay.
2024. So Centrifuge is a relatively large platform or protocol.
Mm,
And it looks like the largest partnership is with an institutional player, Janus Henderson. So that's the one that I think you just mentioned.
yes, sir.
And But what's exciting to me is the use case or the use cases for a DERWA token. So imagine if your deed to your house were a DERWA token, and you could then take that token and supply it as collateral on a money market like Aave, let's say, and then
Okay.
you could borrow against it. That's a HELOC right there, a home
Mhm.
equity line of credit, but without all the intermediaries and all the friction. So that's a really, really cool use case. But you can think of so many more use cases. Maybe the title for your car is a DERWA.
Mhm.
And when you go and you want to sell your car, maybe you just send the DERWA from your wallet to the person who's buying your car to their wallet.
Yeah.
They send you USDC, you send them the DERWA title for your car, you just
Mhm.
sold your car. So, the use cases for this stuff, the sky's the limit. So many different assets are going to be tokenized on chain. I can't wait.
Yeah. Well, David, that gives me an idea. What if we could just loop our houses? You know, go with like 5x leverage on that bad boy.
Oh my goodness. That's not a bad idea. And
Yeah.
in fact, Jake, that kind of like loops in, no pun intended, to what I wanted to talk about
But
today with gold, man. But yeah, no, that's a pretty cool idea.
Yeah.
well, let's definitely get into gold here in a second. So this is the second part of the news that I found on Centrifuge. So this has been out for a while. This was July 1st, but Centrifuge collaborates with the S&P Dow Jones indices to launch on-chain proof of index infrastructure supporting the first tokenized S&P 500 index fund. So, I mean, that's quite bullish in and of itself. I know that Centrifuge is also working with Plume to as an onboarding, because they have a RWA launch pad. So, as you can see on the screen, it's basically a way for real world assets to be onboarded and tokenized, on chain, through Centrifuge's offerings. And they're working with multiple, large institutions. I know they're working with BlackRock, and I mean the list goes on. But yeah, here we go, partners. And this is actually this next month. I'm flying out to New York. I had tickets. Something happened. I'm working on trying to get access back, but I had a non-refundable hotel room and airfare to go out there to the Centrifuge tokenized summit. There in New York, and so I'm hoping that I'm going to be able to report from there and get some interviews. But it looks like, yeah, Aave, Aerodrome, Anchorage Digital, Arbitrum, Avalanche, Axelar, Base, BitGet, BounceBit, Circle. I mean, just the list goes on. Coinbase, Clearpool, Fireblocks, Plume, OKX, Polytrade, StoneX, Wormhole. Yeah, I mean, it's just great project. They have a token. Not, I don't know if it's the token I would necessarily run out and buy, but very, very bullish on Centrifuge and its part in onboarding, illiquid assets into RWAs. So there's that. But well, with that, let's jump into what you wanted to talk about with gold, David.
Sure. Yeah, I'd love to. So, when I'm taking a look at markets here, Mike, and let me just go ahead and let me share my screen here. I'm just going to share the entire thing. And then I want to just pop on over into TradingView and just want to see, can you guys see my screen here as I'm in TradingView? I'm showing ETH. Just want to make sure you can see this.
Yep.
Awesome. Okay. So this Friday, we have a piece of important event risk. We've got Fed Chair Jerome Powell speaking at the Jackson Hole Symposium. And, this is important because he could potentially rug us all if he comes out and sounds a little bit too hawkish. So let me just share with everyone what I've been thinking about leading into this event risk on Friday. Number one, this is a 4-hour chart. Bitcoin put in a little bit of a double top here. And on the way down, we've made this series of lower highs and lower lows on the way down. But notice, where did Bitcoin find support? At 112, which is the breakout level, and where we found support earlier this month at the beginning of August. So Bitcoin bounced from a level of important support. Now that is very positive. However, Bitcoin still needs to break above this level of resistance here in order for us to get a little bit of confirmation that this wasn't just a bounce and then we give it back and move lower. So what I'm doing here is I'm putting together, these are just pieces of information. So starting by taking a look at Bitcoin, I see, okay, we put in a double top. This is a little bit of a shooting star candle, and price has been rejected from 124.5. We moved down, bounced off of 112. That's the first data point, taking a look at BTC. The second data point here, taking a look at ETH, it's important that we identify the market leaders. And ETH has been the leader for the last maybe 2 months, 3 months or so, ever since Ethereum really broke out against its Bitcoin pair and started to push higher in BTC terms. ETH has become, I think, the market leader. So we need to see, what is ETH doing? Well, really nice pullback here after ETH attempted to print fresh all-time highs. So if we just go ahead and zoom out to a daily, I just want to mark the all-time highs here from last cycle right there. I'm going to go ahead and grab that horizontal. I'm going to mark those all-time highs. And then I want to zoom back into a 4-hour, and let's take a look at this chart one more time. So what happened over the last couple of weeks? We had that dip after pushing higher by 50%. So ETH is putting in an interesting pattern. Push higher by 50%, give back a quarter. So this pullback, this most recent one, was almost 15%. This first pullback was about 25, 26%. This pullback here so far has been right around 15%. So what ETH has been doing is push higher by 50%, give some back. Push higher by 50%, give some back. Push higher, give it back. But now that we're sitting at what I think is a level of support right here, right here. So I drew in this channel by connecting the high just below the all-time highs with this high that we put in and in the third week of July. So I took this trend line, cloned it, and created this channel. So we've got this confluence right here where we've got moving average support and trend line support. ETH bounced, but we still need to break above this trend line resistance to get a little bit of confirmation that we're actually going to push back up and make another attempt at printing some fresh all-time highs here. So what do I see just taking this in? Bitcoin put in a double top at 124.5 and then tested support at 112 and bounced. ETH tested its all-time high, rejected, declined by 15%, and now is bouncing at what could be viewed as a level of support. And we've got to take a look at TradFi real quick. So the S&P put in what's referred to as a look above and fail, or a false breakout. So we've got this
the gopher. It did the gopher.
yeah, it looked above and failed. So this was the all-time high, and then right here, the S&P. These are S&P futures, and they lead the cash index. So S&P futures put in this fresh all-time high and failed. And so notice where we found support at the level where the S&P found support. This is the 200 period moving average on a 4-hour. So holding support, just kind of treading water, a couple of percentage points away from all-time highs in the S&P. But you got to look under the hood a little bit, because over the last couple of sessions, NVIDIA, which is without a doubt one of the leaders here, And NVIDIA has not reported their I think, what is it, second quarter earnings yet? NVIDIA hasn't reported yet. They're the last Mag 7 company to report. We get that earnings report 1 week from today after the close. So NVIDIA has rolled over into its earnings report. But, you know, I don't think that this AI tech narrative is just going to roll over and die over the course of a session or two. This
Yeah.
might be a great buying opportunity here. Now,
Okay.
another one that's important, PLTR to take a look at, and this is
Oh,
just recently
Palantir.
over the last couple of sessions. Yeah, so Palantir pushed higher after earnings and has closed that earnings gap, given it back, found some support above the 200 period. So remember, these are all just data points. We started by taking a look at Bitcoin. We saw that it was rejected after printing a slightly higher all-time high and then found support at 112. We've seen that ETH pushed up towards its all-time high, did not print an all-time high, and has corrected by 15%, which is in line with the previous correction that we saw at the end of last month and the beginning of this month. So everything looks okay for ETH. Bitcoin has held support. The S&P has pulled back just a little bit from its all-time highs, but we've got this event risk. So we've got to start taking a look at vol markets. We've got this event risk on Friday where Fed Chair Powell, the expectation is that if I go on over here to FedWatch and we take a look at the FedWatch tool, the expectation leading into the Jackson Hole symposium is that, hopefully Powell doesn't sound too hawkish and we get some type of confirmation that there's going to be indeed at least a 25 basis point rate cut in September at the September meeting. But remember, we've gotten a handful of jobs prints, which seem to be not very good, and a couple of inflation readings over the last 2 weeks, which may have been hotter than market participants are looking for. So there's a real possibility that Fed Chair Powell sounds hawkish and just pulls the rug out from everyone by saying that maybe we don't cut in September, and that would mean that this would need to get priced out. So if rate cuts start to get priced out as a result of Fed Chair Powell sounding like a hawk this Friday, then I think there would be significant downside ahead for the S&P and for risk assets, digital assets, Bitcoin, Ethereum, etc. So as much as people say that Bitcoin is digital gold, it simply does not trade like gold. Bitcoin does not trade like a risk off asset. Bitcoin trades more like NVIDIA than it does like gold. So,
Mm.
leading into this event risk on Friday, what am I doing? Well, I own a little bit of ETH, long ETH still, but I'm looking at opportunities with XAUT and PAXG. And the
Okay.
reason why I'm interested in this, and let me go ahead and just um, bring up a handful of markets that we can take a look at. So we can take a look at some opportunities on Morpho. We can
Mhm.
take a look at opportunities on Euler. We can take a look at opportunities on Fluid. And we could even look over here on Contango to loop some gold. Now, XAUT and PAXG, a lot of these markets are not very liquid. So position sizing is going to be important. And also, to borrow stables against either XAUT or PAXG is actually quite expensive. So to loop a gold position by borrowing stables, you might end up paying like a net APY of like 10% to
Okay.
keep a levered long position open. But it doesn't sound like a bad idea to have some type of a hedge going into this event risk on Friday. That's all I'm thinking. I'm thinking, I just want to hedge myself. Should Powell sound more hawkish than people are hoping for? I'd like to have some type of a hedge. But I'm going to go ahead and pause it there and stop my screen share. What do you think? What do you guys think about that thesis?
Go ahead, Jake.
I was gonna say, I think you're right on, David. Like from a broader perspective and from a less like granular approach, it kind of falls in line with what I was thinking was gonna happen with the market. Ethereum kind of goes up, it retests that high, it fails like it typically does when we're retesting an all-time high. I mean, this happened to Bitcoin a while back when we were at around like 70-ish, I want to say. Also happened again when we were at around like 100K or so. So again, just standard, pretty normal thing to happen. Retest that high. The people that wanted to get out got out. And then obviously this is the broader kind of economic standpoint that affects the crypto markets. And you're right on with the fact that Bitcoin does not trade like gold. I think there's a world where maybe eventually Bitcoin is digital gold, but I think we also all know that it's significantly more volatile than gold. So yeah, and as far as like kind of where I stand, I think we're going to hit an all-time high next month for Ethereum. Right? I don't think we're going to see any crazy gains for the remainder of the month or anything like that. I think we'll probably continue to retrace. But yeah, hopefully, and as far as like rate cuts go, I think we'll see a rate cut come January. I do think that they're going to be a little bit strict on that still, though.
All right. Yeah. So I guess I mean, what do each of you, David? Go ahead and go first. Kind of what do you see? And I know none of us have a crystal ball, but what do you see? How do you see the rest of this cycle playing out?
So, in DeFi U, in the previous hour, Mike, I got a question from a member that was similar along the same lines here. And what the member was asking was, is the Bitcoin halving cycle analysis still valid? And so here's what I'm thinking about over the next couple of months. I'm thinking about seasonality. So number one, the corporate buyback window closes at the end of this month. So that's one data point. Remember,
Okay.
all of these big corporate institutions, they're buying back their stock. They have windows in which they're able to do that. And the corporate buyback window closes at the end of this month. So September, we're not going to have that corporate buyback bid. Okay, so that's one item. The second item is, seasonally speaking, retail, that's you and me, we our buying tapers off starting in July. And then by September, retail buying is the lowest that it is all year.
Mm.
So that's another data point. So we've got buybacks, that window closing. We've got retail, maybe not as active in September. And now, speaking specifically about digital assets, in the post halving year, Septembers have always been negative and quite negative. So if Septembers and post halving years are negative, and we know that there may not be the same bid under the S&P in September, and September is seasonally when you see VIX start to push much higher. So that's vol, that's S&P vol. Okay, so if I know that going into September, the Bitcoin halving cycle analysis tells me that September in the post halving year is usually red, and I know that Wall Street is, preparing for more volatility in September, those are data points for me. Now, I also know that Bitcoin just put in a fresh all-time high just a couple of sessions ago, 124.5, but it was a really weak high, and we were rejected by that high almost immediately. I also know that Ethereum attempted to put in a fresh all-time high, but failed. And here's another thing. Those ETH treasury companies, I don't think that you can make a direct comparison between those ETH treasury companies, their strategy, and what Michael Saylor is doing with his strategy company. The only thing that's really similar is that they're both buying digital assets. But the way that the ETH, strategic reserve companies are structured makes them much, much more dilutive to shareholders than Saylor's strategy. So that's a problem. And if everyone is so bullish on these ETH strategy companies and thinks that their buying behavior alone will push ETH to fresh all-time highs, well, there's a lot of ETH for sale still. And, I don't know that Tom Lee and SharpLink Gaming together have enough firepower to be able to push ETH to fresh all-time highs alone. So I'm just thinking to myself that there's a good chance that Powell rugs us this Friday and that September turns out to be red, not just for digital assets, but also for TradFi. And if that Bitcoin halving cycle analysis is valid, Mike, then what we should expect is that October, November, we see some type of crazy blow off top.
Okay.
And that's kind of what I'm looking forward to. I'm mostly in cash right now, Mike, and I'm just waiting to see what happens over the next couple of sessions. I want to see what Powell says on Friday, and I don't think that it makes sense to be too overzealous right here. I can afford to sit and wait for a good entry and see what the market gives me. Patience is king right now, I think. And if you're long, I think it probably makes sense to think about hedging it in some way. But those are my thoughts on the next couple of months.
Excellent. Thank you, sir. Jake, what are your thoughts?
Honestly, like I'm pretty in line with David as I mentioned earlier. And like as far as like how I'm tailoring my strategy, I mean, you guys know me that by now. I'm kind of just in that bucket of like buy and hold, but to an extent of like trying to play the market as well. So like I'm usually not trading in and out during bullish times. And granted, like there's not as much money to be made in that instance, but also at the same time, it's not as much money to be lost in that instance if you do it wrong. So yeah, again, like with my liquidity pools already on broader ranges, and that's one of the things I like to do. Whenever I anticipate me being busy, whenever I anticipate volatility coming into the market. I was just in Minneapolis over the weekend and got back yesterday. So I was essentially knowing that I'm not going to have my ledger, rebalancing my pools and stuff like that if I needed to. So before I leave, right before I go and I set all my liquidity pools to broader ranges. I do any rebalances that I need to do. I make sure that I don't need to bring that ledger there. You know what I mean? To essentially minimize risk of it being stolen, lost, whatever. But also just make sure that I'm protecting myself in case that there is volatility over the weekend, which there has been. We've seen some pretty hefty declines already, and we most likely will continue those. So.
Oh, all right. Yeah, no, as far as I'm concerned, I mean, I honestly, I know it sounds bad. I really don't care what the markets do because I mean, I know that everything's not going to zero, and my mindset is a long-term mindset. So, most of my investing is in things that I'm bullish on long term. Most of my DeFi plays are super wide range or full range positions, or just simply staking for the most part, or lending, to where really no matter what the markets do, I'm always earning. So that's kind of where I'm at currently. Is I'm just more focused on earning no matter what the market does, and trying to ensure that I don't, lock in any impermanent loss in the process. I mean, that's kind of my quick analysis, but I'm not super analytical. Like I said, I'm that old vet in the woods that enjoys learning about crypto and homesteading. So, I definitely don't have the background that David, and I definitely don't have the years of experience that Jake does as far as analyzing these markets. So I keep it simple, stupid. It's I try to not to get too complicated with my analysis, but well, one thing that I did want to point out on our mastermind group earlier today in the Discord, um, Tim, one of the gentlemen that is part of that, and Emery, they actually started getting involved with basically buying discounted VE Arrow locks, to where you can get 45% or around there discounts on locks. So people that are wanting to make their locks liquid to take advantage of market movements or something else, you can actually buy them at a discount on this Vexy platform. So, and we even talked about looping strategies with them, to where you could potentially create locks, get the flight school bonus, keep the flight school bonus, turn around, sell it at a discount. Of course, you need to do the math to make sure that it's profitable. But and then once you sell the initial lock, go back in, do another lock, get the flight school bonus, and basically just kind of rinse and repeat to stack flight school bonuses. Something that might be interesting to look into. I personally haven't tried it yet. It was something that we were talking about hypothetically in the Discord, in the mastermind group. Those of you that are a little bit, degen, if you want to check that out and kind of report back to us in the Discord and let us know how that worked out for you, or maybe if you just crunch the numbers and find out if it's something that could be beneficial. This might be a profitable play. I mean, I know that it's not something that obviously that you gentlemen have looked into it in any depth, but what are your thoughts on it?
Oh, yeah, no, in fact, Jake shared this with us the first time we spoke, and
Oh, did he?
yeah, so
I'm
Vexy,
sorry.
and so Jake, thank you for that because I actually sold my lock a couple of days ago using Vexy. And so I've been trying to sell that damn thing for months. And the nice thing about Vexy was that you can get a bid if you're trying to
Yes.
sell your lock. They'll give you a bid at a 40% discount. They'll just buy it from you. So, for me, that was a no-brainer. When Arrow was at like a dollar 35, and I think it's back at a dollar 35 now, I exited my lock. I took the 40% haircut and just said, "Thank you very much. I'm out."
Yeah.
Which, for me was great. But yeah, man. So the thing with the flight school bonus is okay, if you buy, let's say that you enter a lock and then you
Mhm.
receive that flight school bonus, what is the current flight school bonus? Is it
80. Oh,
30?
currently it's 81%.
Oh, wow.
Yeah.
81%.
Yeah.
Okay. And that's every month, right? So you get one flight school bonus and it is deposited into your wallet at the end of each month or each flight school,
Yes.
right? And each
All
flight school
right.
is like basically a month long.
So, in a nutshell, anything 2,500 arrow or more, you are eligible for the flight school bonus. It's going to vary depending on how long you do the lock. The epochs for the locks, to where you earn rewards, is weekly. However, the flight school bonus is monthly. So you would have to buy or create a lock. You would have to hold it until the end of the flight school bonus period, get the flight school bonus, then go and sell it on Vexy or someplace else. And again, do this rinse and repeat.
So the real risk there is holding arrow, or at least the risk is holding the lock. So
Mhm.
if you take, let's say, 2,500 arrow, you lock it up, and then you get 80% of that. 80% of 2,500 is what? Something 2,500 times zero point 0.8. So you're going to get a 2,000 arrow lock. You
Mhm.
can then take that lock and immediately turn around and sell it over here on Vexy. You take a 40% haircut,
Mhm.
but that's still not bad as long as the Arrow token price doesn't dip that much. If the token price goes up, great. If it dips, well, maybe not so good. So I think the timing here would be super important. So you
Yes.
know how you wait to vote using your lock until the very last moment, leading up
I'm
on
going to be doing
Wednesday.
it immediately after this show because the epoch ends on Wednesday afternoon.
Right. So along that same, in that same vein, wouldn't it make sense to then wait until the very end of the flight school period to buy your lock?
Absolutely.
Right. So when is the end of the flight school period?
It varies. So right now, I'll pull it up. I have it saved. Let's see, data, VE Arrow rewards program. They have it on Dune Analytics. So current flight departure is, so it looks like the 27th.
This month.
Yeah.
Okay, so maybe you buy your lock on the 26th and then get that flight school bonus hopefully the next day, and then immediately turn around and sell that lock, that flight school bonus lock on Vexy.
So yeah, this is where it's currently at 81%. But now keep in mind, everyone listening out there, that it does vary month to month. Like when I first did it months ago, it was like, I want to say it was like 50 something or 60 something percent. It's gone up quite a bit because of the amount of volume on Aerodrome. So it's going to depend month to month because, oh, you can see over here on this chart, this is each flight school, that has occurred. So, it built, it dumped off, when the market took a dump and the volumes went down on Aerodrome. And then since, I mean, it's been going parabolic. Like this last month, I mean, holy hell. It went from like 39% up to 81%. So these are all things that you have to keep in mind before ape into, these types of, degen strategies. It's not just something you want to run out and do. There is a lot of risks involved. But if you're already in a lock like David and you are wanting to get, liquid, it potentially would be, a strategy that you could use.
Yeah, it's just for me, Mike, I got to say having it locked like that,
Mm-hmm.
having tokens locked like that, that is something that I really do my best to avoid.
Mm-hmm.
It doesn't matter what the yield is, having it locked up, man, if something happens, you're kind of stuck, So,
It just matters
um,
what your risk tolerance is.
sure,
You know,
sure,
I mean, yeah, I
definitely.
mean, I wouldn't suggest doing a large portion of your portfolio, but I mean, just like with a meme coin, if you're taking a couple of percent, like 2% or 3% of your portfolio to do some degen move, I mean, why not? I mean, when I entered my lock, Arrow was, I think, at just under 50 cents or something like that. So it was about like what was it? About $2,500 that I put in, and currently I have about 10,000 with the school bonus.
He's cutting out.
Oh, I think we lost him.
Well, what I was going to say regarding locks as well is, locking anything up, to me, it reminds me and gives me PTSD from the node projects where you
Oh,
invest, you
dude.
get 1% a day in their tokens. We had Ring, we had Vapor nodes, we had Thor, we had forget which ones. Is kind of funny because I was making some money off those things like when they first came out. Just surprisingly, my CPA reaches out to me, ask about like what it is and everything like that. Dumps like 20 grand into like it was like strong nodes, loses all his money.
Oh,
I'm like, I like told him, I'm like, well, timing's a big factor on why you have to get into these. They're not the most sustainable model or whatever. I'm
Yeah.
like, but if you're curious, here's what I meant, and dude just ape dried it.
So and I'm not sure where I lost you, but in a nutshell, basically for me, just everything that I see about Aerodrome, with its integration into Coinbase and in Coinbase's app, now with the news with Centrifuge, it just really seems like it's becoming a integral part of DeFi and
Mm,
RWAs now. So it's is it a risk? Absolutely. Is it a risk that I personally am willing to take because I see the upside? I did some rough math, and at 30% compounding, 30% APY compounding weekly, I'll have about 75,000 tokens by the time that mine unlocks. And if Aerodrome is even $10, that's $750,000 that I would have made off a $2,500 investment. Risk
yeah.
reward. It's, and again, I'm not saying it's for everybody. I'm just saying for me, for my risk tolerance and my financial goals, I'm willing to risk the biscuit, for the gravy. So,
Well, the thing that you kind of have to factor in is like if they're printing more tokens, they're like, and there's infinite supply for Arrow token, is there a world where it could be $10? That's what you have to kind of consider. Like with Solana, I've kind of accepted fate with that thing, that it won't probably really hit anything higher than maybe $500, just
hmm.
because unless they somehow like, come up with a new economic model that's like better than, literally any country in the world has for their own currency. They'd have to come up with something pretty damn brilliant. But like, um, it's infinite supply, and like it's just so cheap. You can't, there would have to be so many people using the Solana network in order to make like, it worth it for validators to get paid based on transaction fees. Just so many people to be able to make it worth it. And then you have the issue of, if there's too many validators, then it's like now there's like no return for Sol tokens. So that's what I would consider. That's what I would kind of think about. And that's kind of like what I guess. And again, nothing, no hate towards Aerodrome or anything like that. I do think the team's great. I do think the platform's great. I'd happily deploy into liquidity pools over on there, trade over on there. But as a token holder, that's what I look at, and that's just not for Aero, but also Sol, as we mentioned, Ethereum for a little bit there, right? Until they introduced the burning mechanism, and we still inflate by a little bit. So yeah, all stuff to consider.
No, for sure. And I'm trying to find it, but I've looked at the data in the past and the tokenomics, and basically like the percentage of the fresh tokens that are released and where they go. And I know that a good portion of them go to locks that are auto compounded into the locks. So I mean that definitely has an impact because a lot of those tokens that are being minted aren't going out into circulation to where
Yeah.
they can be sold. So, I mean, what you're saying is valid, 100%, but you have to really dive deeper into the tokenomics to understand where those freshly minted tokens are going. So,
Yeah. Well, another consideration is like, Aerodrome and a lot of people in general just started locking up their Aero tokens around the same time. Like I'd be very, very cautious come up 4 years from now because you're going to see an
absolutely.
immense amount of people dumping those things. People that no longer even invest into crypto or DeFi, people that, moved on from Aerodrome, people that just want to take their profits. Like there
Mhm.
will be dumps. It's the same thing when, you have people that bought in on a pre-sale or something like that. Their tokens are finally unlocked. You always got to beware because people want to translate that to real life dollars, meaning that they're going to have to sell. So using a platform like we were kind of talking about earlier, I would consider selling those tokens prematurely, maybe after 3.5 years, maybe 3.75 years or so of Aerodrome being released at a slight discount, but just so that way you can kind of net out positive.
Front run the potential sell off.
Exactly. Yeah.
You know what,
No,
Jake?
like I said, I really like the contrary views that you guys offer because we can't. It's one of the things that bugs me so much about XRP community. Not that I have any FUD against XRP or the community, but just it's like almost cultish to where if you say anything negative about they just come out with their claws and fangs, and if you cannot have a critical discussion about your investment and have a deep enough understanding to have a debate about it, then you probably shouldn't be invested in it.
Yeah.
And I'm just
Well,
going to throw that out there.
one thing that I heard is like 80% of XRP holders don't even know what XRP does. And I'm like, that's so you won't even like whenever you say like to a person, oh yeah, I'm in the crypto space. They're like, what are your thoughts on XRP? Like that's like I feel like everybody
Huge
gets
red
that.
flag. Yeah.
Grandma's asking, what are your thoughts on XRP? And I'm like,
Yeah.
oh gosh, not this again.
Well, my first question to anybody is, do you know the difference between XRP, the XRPL, and Ripple? If you don't know the difference between the three, you should not invest anything into XRP. And if you don't understand what the use case is and the pain point, that they're trying to address, you shouldn't. And if
Yeah.
you don't understand how the addition of USDC and RLUSD onto the XRP ledger affects the use case of XRP, you definitely should not be investing in XRP.
Yeah. 100%.
So
Yeah, so Jake said something that I just want to highlight a moment ago. This could be a great meme, Jake. So you said there will be dumps, and it reminded me of the movie There Will Be Blood. So you could take an image of the protagonist of that movie and have him with that bowling pin when he's about to kill the preacher at the end of the movie.
yeah,
Spoiler alert, and you could say there will be dumps. That would be a pretty great meme then. But
There we go.
yeah,
Yep.
so Jake, I want to ask you something, Jake. What would be your preferred way to hedge upside? So let's say that you don't have many positions open, or maybe you're sitting in cash. Outside of just buying something spot, how would you hedge upside? Like, what would be one of the most capital efficient ways for you to gain some upside exposure here? I'm curious. I've got an idea in mind, but I want to learn from you. What do you think?
Yeah.
that's a
So
great
like,
question.
tell me a little bit more about like, the goal, like as in, hedge the
Sure.
downside. You only have upside, or hedge the upside out so you can be delta neutral.
No, so all I'm trying to do here is if I'm sitting mostly in cash, let's say that I don't have any positions on right now, but I think there's a possibility that maybe Powell sounds more dovish than people are expecting on Friday, and
Mhm.
markets just rip and run higher. I want to hedge that upside. So if I'm sitting in cash, what's the most efficient way that I can gain some upside deltas without buying spot? I can think of a couple of ways, but what would you do?
I'd say options.
Me too.
Those are your best bet. You run liquidity pools and potentially hedge with some options. And the cool thing here is like you're betting on volatility. So, and there will be volatility when Powell speaks, like we all know that. So it's going to be relatively easy to kind of cover premiums, I would say. And while we're on the topic of hedging, I wanted to run something by you, David, that kind of came to my mind. Uh, so we have like a lot of instances where you want to do some looping, right? And you go to a market, but then it's like you can loan out USDC for like 10%, borrow say USDT for 9%, right? There's not much of a spread there. Maybe it's 9.5%. But you can borrow Bitcoin for 2, right? So would there be an instance where you would essentially borrow Bitcoin against USDC, let's just say, right, to get that 8% spread? But then you have some capital over on the side, over on Hyperliquid, and you long Bitcoin with, 4x leverage or so. So you're going delta neutral on that borrow, right? On one end of it, right? But then you're keeping that spread right there to be able to capture that full looping opportunity. Have you ever tried something?
Yeah. So I totally see what you're getting at, but I wouldn't structure it that way just because I wouldn't want to be short Bitcoin on a
Yeah.
money market by supplying stables and borrowing Bitcoin against it. Instead, and you could definitely structure a position in that way. What I would do instead, though, Jake, is I would look for a protocol where you get some margin relief,
Hmm.
where you can deposit your USDC, let's say, and then borrow, WBTC against it, and then also be long BTC all on the same DEX.
Hmm.
So getting some margin relief would be great. You could do that on Drift.
Okay.
Drift would allow you to do that because it's got the lend borrow protocol built into the perp DEX. So
Yeah.
you can use your lend borrow position as initial margin to trade, which is great. Um, Now, if you're executing the strategy on, let's say, Aave and Hyperliquid together, then the single most important thing for me would be can you monitor your portfolio from your wallet or maybe from DBank? I would want to know, you need to be able to see the positions. So
Yep.
whatever the short leg is, you need to be able to see it from within your wallet. And so Rabby and DBank can now see those hyperliquid positions. But no, it's valid for sure. It's just, I don't know that I would be after basis right now when there could be some type of
Like,
crazy parabolic rip to the upside. So I
yeah.
think the timing for a position like that, maybe you do something like that in November,
Yeah.
you know?
Well, what if that's something that because you are delta neutral in that aspect, and it's just kind of something that came across my mind. I'm like, huh, wait, couldn't you like just like I'm like, wow, I wish we could get these Bitcoin borrow rates or whatever on a stablecoin. And I'm like, wait a second, couldn't you just long Bitcoin while shorting it, and run a looping strategy like that? But yeah, I mean, you're completely right. If you lever up too much, right, you're shorting Bitcoin in a bull market. It's definitely a consideration. Um, but if you play it safely and you have a nice little spread on those, I imagine you get like 15% or so on a pretty decent size money market. Um, but yeah, I mean, you just have to monitor it so you don't end up getting liquidated or anything like that. Um, but then, at the end of the day, like getting liquidated like the worst thing to happen if Bitcoin's running up, because your short gets liquidated, yeah, but your long still, pumping over on hyperliquid, and at the same time, you also have some upside because your short's liquidated. You just have to make sure you don't get liquidated and then instantly snap down.
Right. Right.
That's the concern. But
So
yeah, I mean,
Jake, you know what you could do?
yeah, yeah, yeah.
Maybe instead of using, a handful of protocols together, you could execute this using one protocol. You could
Yeah.
just go to Contango and, look for a Bitcoin pair. Maybe you use some Bitcoin derivatives that are yield bearing or something like that. Or maybe one trades at a premium to the other. So if you're long Bitcoin and short Bitcoin and you loop it, well, then you can capture that basis that you're after without having that liquidation risk. So Contango might be an interesting place to go.
Okay.
I I love this. I love this discussion, and that's actually a really good segue. I've actually been contacted by Contigo, and they want to come on and talk about their platform. Both you gentlemen are welcome to join. And this Friday, I'm me and David will be having a regular episode on Fridays, and I'd like to finish our conversation, or maybe have enough time to really give the Pendle Contigo, Pendle by itself, but the addition of Contigo and looping.
Mike,
That's
I'm sorry, man. I gotta cut you off there. It's Contango, Contango. So,
whatever. You know
so
what I'm talking
Colin,
about.
I
Jake
know,
knows
I
what
know what you're talking about,
I'm talking
man.
about.
So,
Everyone out there knows what I'm talking about.
every time I've heard you say that, I'm thinking in Spanish, con tu, or con, if you're like, speaking in slang a little bit,
Yeah,
contigo is like with you. So
yeah.
like,
So Contigo,
so
Contango.
We don't want to blow the
continue,
tab, Mike.
tomato,
I
tomato. Yeah.
Yeah. So I this Friday I'd like to finish that conversation, or maybe structure it to where we can fit it in the allotted time. So definitely, like I said, I'll, whenever I get a date and time, I'll let you guys know, because like I said, if you want to be on that call, I would enjoy the the added banter, as far as added, asking pointed questions, things like that. And then I also wanted to touch on really quick. Me and David collaborated and built this DeFi looping calculator over this past week. I built it out on a spreadsheet, put all the formulas in, and then he plugged it into this AI that made a nice, user interface for it. So I'll make sure that we link this in the Discord. Links for the Discord are in the episode and our channel description. And I'll make sure that this is there, along with our spreadsheets that we use to track our DeFi positions and things like that. Um, a really good tool again is Jake's tool, Metrics Finance. I know that he's working on to make it more comprehensive, to where it captures more chains and more positions. I know that, and we've already talked about it, but Black Hole, on AVAX, he's working to integrate, and a couple of other ones.
Yeah.
But until then, I'm those positions that aren't tracked on metrics, I'm tracking on a spreadsheet, just so I can make sure that I'm able to stay profitable, make sure I'm staying profitable. But
Well, go ahead. I was going to
oh
say,
no, no, go
we
ahead.
we gotta still some revamps to do, but like we gotta get you on custom positions for metrics finance, because we added the ability where you can just track a custom position, and we're exploring, methods where we can even somewhat automate that by pulling from public APIs like DeBank, Morales, Jupiter, a Step Finance, stuff like that. So that way, you can have a semi-automatic tracking. You just have to manually add it to your dashboard and say, hey, this is part of my portfolio. So cool stuff coming there. But yeah, I mean, we'll definitely continue to support things. If you guys want anything supported, just literally open up our little live chat and say, hey, like, we're looking to do this. And we have like a little dashboard that shows like the request for a specific chain network. Got a cool collaboration coming up with PancakeSwap, so excited for that. They just launched in the Solana network, which is pretty cool. They one of the first top dexes to go like not just cross chain, but like EVM to Solana or Solana to EVM at the same time. So interested for that.
No, that's freaking awesome. Yeah, no, I don't know about you gentlemen, but I've been loving this collaboration because I mean there's just so much value here. I mean, with the tools, Jake, that you're building out, the knowledge that you have and that you put out on your channel, David, building out the DeFi University to where basically from butt to nuts, you're going to be able to teach people the basics of DeFi all the way up into advanced strategies in a very structured way that they can access whenever they have the time. So, it's not like, trying to find something, like our channel or, a channel on YouTube and trying to piece together the education. It's that structured gradual build on knowledge of, using the knowledge from the previous lesson to, build the lesson after that. So,
Yep.
Yeah, it's just I mean, that's the power of being part of a community. So I know that Jake has an advanced course, the Builder Wealth. If you are further on in your education or just looking for a strong community, by all means you can reach out to them and join that community. David, again, if you hurry before this weekend, you can get in free to his DeFi University. After that, it sounds like about $97 a month. And then of course, if you're just looking to kind of, dabble a little bit and get your toes wet and, just kind of learn as you go. Of course, there's endless YouTube channels you can go to, DeFi Dojo, Jake's channel, my channel. But I definitely caution you to ensure that before you give your money to anybody, make sure you're just like with investments, do your due diligence and ensure that the money that you're giving is that there's a return on that investment. There are people out there that are asking for very large sums of money to be a part of their community. And I'm not going to call anyone out, but I have talked to people that say that they have gotten more value from free courses or free channels like ours and David's and other people's that than they got from those very expensive paid courses. So any closing thoughts, David, before we cut this off?
Oh yeah, I do actually. So, Jake, I asked you a couple of minutes ago what you would do to hedge upside, and you mentioned options, and that was exactly what I was getting at. So I just want to share my screen just real quick and point out a specific opportunity that I'm thinking about here. So, leading into this Friday, at where Mr. Powell is going to speak, I'm thinking that if ETH breaks out and Bitcoin is able to break out above some resistance, start to invalidate this short term downtrend a little bit, how could I play the upside without having much risk on and by defining my risk? Well, I would probably start by taking a look at options over here on Derive. Now, there are a lot of risks trading options on a decentralized protocol. The greatest of them is liquidity. So you need to make sure that there's enough notional volume and open interest trading on this protocol. And to be completely honest, not really. There really isn't. But this is the best we've got. You could take a look at Ithaca. Ithaca also has some volume. The problem with these markets is number one, the spreads. these are at the money options, but these spreads are extremely wide. That's the first thing. The second thing is when markets really start to move and become volatile. I'm talking about for ETH, a plus or minus 5 or 6% day, then you start to see these spreads widen out even further. And sometimes market makers over here on Derived just step away from the market and there's no market at all. So if you're stuck in a position and there's no market, you can't exit. Okay. So you got to keep all that in mind. But if you just want to punt and just buy something with defined risk in case, we get a dovish Powell on Friday and markets rip higher, well, a cheap way to do that would be to buy either slightly in the money or just barely out of the money, just an at the money call. So something like this expiring 1 week from today, this seems like a decent way to get some upside exposure while defining your risk. The max amount that you could lose if you buy premium is whatever you pay it. So if I'm buying an at the money call and I'm paying $162, that's my max risk. So something like this might make sense. And if we see prices rip higher, because digital assets and Bitcoin and ETH exhibit kurtosis, as prices rip higher, if they rip higher, you might expect volatility to also rip higher, which would be good for your option position because your Vega component, your delta gamma theta vega rho, your Vega is one of your Greeks that's used to price the option. Vega is your volatility. So if volatility blows out to the upside, it's likely that the premium would also push much, much higher. And if this strike goes in the money because ETH is ripping higher at the same time that vol pushes higher, you have a nice little trade on your hands. So this is one cheap way and capital efficient way to get some upside exposure without having to go and buy spot. So that's something that I'm thinking about.
100%. I like it, David.
Cool. Thank you.
All right. Well, gentlemen, as always, I definitely appreciate you being here, and I look forward to next Wednesday. And David, let's chat a little bit before Friday and see if we can, because I know Pendle is such a beast. I mean, there's so much to it, and it's such a unique platform that I want to make sure that we give it the attention it deserves. And then we will talk a little bit about Contango. And
there you go.
and oh, here we go.
This one. Yeah, here's Contango. Yeah.
Yeah. No, and it's and like I said, I mean, that is where I am laser focused right now. Because I mean, regardless of what the markets have been doing and this choppiness we've been experiencing, I really feel like in the coming months that that we're going to be that the market's going to be moving in such a way that we're going to be taking profits, and I'm going to be taking them out into stables, and I want to know how to put those stables to work while we still have that volatility and that volume in the market, so that I can earn as much as I can. And then when the markets start to dump, if I'm have that treasury in stables and I'm taking those profits from the looping and the things like that into stables, my profits are locked in. When the markets start to dump, all I have to do is just sit back and DCA in, as I feel appropriate, and start building out a new DeFi portfolio. So I look forward to talking more to you gentlemen, and till next time, see you later.
Alrighty. Thank you, Mike. Thanks, Jake. See you guys.
Take care.